Hello everyone, I'm Taha, financial market analyst with zForex, and this is our weekly analysis. Welcome abroad.
Hello everyone, this is Muhammad Bukhari, and this is our weekly video. This week, like always, we will take a look on the most important pairs, the most important events and data that we will cover this week, and they will have an impact on the financial markets, especially on the Forex markets. So starting with the dollar and the US. So this week will be full of events for the US, especially the PMI data for August, also in the services, the manufacturing. The PMI will not be just for the US. We will have economic calendar that will be full of PMI numbers on the 23rd of August, starting with Australia. Starting with Australian, the flash for the manufacturing services, after the Japan, France, Germany, Europe, UK, and afternoon will be for the US. So those data, especially this day, the 23rd of August, will be so much volatile. We see a lot of volatility, and it will give us an idea about the health of the economy in general on the developed countries, for the major, especially for the Forex. So this day it will be should be more careful, more attentive. Data that you will receive, especially right now, we see that we are closing to the end of the cycle, the tightening cycle for the majority of central banks. And the data or the health of the economy is right now is so much important, especially the central banks trying right now to find the solution or to find a way to not find themselves facing a possible recession that it may affect their projections. And right now, for the European Union, especially Europe, where Lagarde in the last meeting she mentioned the impact of those levels of interest rates on the economy. We'll see for the UK, especially GDP, the last time was so much good for the UK. We see the health of the economy for the US. We are waiting for more the downgrade on terms of manufacturing. We will see how services are performing, but somehow still better than the European Union. That's for the PMI. That's one of the most important events and data for this week and the most watched. More than that, we will have weekly we will have the weekly jobless claims, the core durable goods. Core durable goods really important, especially for forecasting the GDP. Right now, the GDP from the last data, from the last metrics, trying to forecast how it could be. There is optimism that GDP for the next quarters and for this year will be more than expected for the US, which will be helping the dollar. Also, we will have at the end of the week, we will have the Jackson Hole Symposium, where we are waiting for Jerome Powell to have a speech. This will have an impact on the sentiment. Everyone will watch and we'll keep an eye on this. So that's for the dollar. Generally, we are right now on a sensitive point in terms of business cycle and also in tightening of monetary policy cycle and prediction toward the performance in economy, toward the possibility of recession or worse than expected economy performance or better than expected. Data from time to time, they are really surprising, especially, for example, the resilience of the US economy until now, UK growth that it seems better than expected. An economy like in Germany, where things doesn't seems good, nor from the manufacturing, the services, the CPI, the inflation is still high. This we may say is impacting all Europe. Right now, we saw clearly that even the markets right now, for example, if we go to the US and the yield, everyone right now is talking about the yield. Everyone is interested by the bonds markets. We saw that the US 10-year is right now coming back to the higher highs that we saw in the 21 October 2022 at 4.3%. We are at those levels. This means something is that the market still believe that those tightening, these levels of interest rates, the central banks, especially from the US, it the Federal Reserve will keep those interest rates for longer than expected. Projections they are that we may see cuts until the second quarter of 2024, as the economy still need this tightening. We saw and we hear a lot of members of the Federal Reserve, FOMC, talking about that the inflation is still high. We may need more. This is so much hawkish, and this could have an impact on the projections for the next meeting, especially for September, where probabilities and bets on possibility of a hike coming started to come higher. Still low, but coming back to come higher. And question right now, do the Federal Reserve ended its hikes, or we may see another final one? Rather than that, for the Europe, same thing. The most important will be the PMIs, especially PMIs. Also, we will have the GDP from Germany, where we are waiting for a slowdown in this data. PPI from Germany also it's important, but generally this week, for if we want to make it in one word, it will be the week for gauging economic health, real economic health, following the PMIs. So that could be the most important thing for Euro. For the UK also, this week will be important concerning the PMIs also and consumer confidence. We'll have it on August 25, Friday. For the Asians, especially Japan, and before going to Japan and China, we may take a look on the pairs euro dollar. We are seeing that euro dollar went back and touched this important support, like we talked last week. This 1.085 played as support, and we are seeing that even the euro dollar, also the XY, we are seeing a concentration of price, both support resistance, supported euro dollar as a resistance on the DXY, and we are seeing that the markets are touched those levels and they are waiting. What they are waiting is the data from this week to make direction, to find a way to say we will go up or go down, we will more buy in dollar or not. These levels we are seeing the euro dollar, the XY. We are seeing also similar things on the pound dollar. Pound dollar finds support. A reversal pattern is clear that is forming around those levels. We touched the 1.265. We are preparing a possible reversal pattern. It's clear pattern for concentration of price, a pattern for reversal. We'll see how the impact will be. Also, we have the US 10-year yield, where the price, like we said, touched this resistance, touched this historical level. A breakout of this level for sure it will help dollar coin continuing up, and we may damage gold, where gold right now is breaking. They broke this channel, this positive upper channel, bullish channel. They break it at this level, so gold seems bearish more than bullish. So, but following the developments, we are waiting. For the economic data for this week. Going to the Asians, especially the dollar, Japan, and the data that we will have this week and the situation right now. For the dollar Japan, we touched the 1.46.6, an important resistance level, and we are coming back toward the 144.8. This level where we are right now, we heard things from the Central Bank of Japan, the financial ministry, talking about a possibility of intervention. And we know that the Bank of Japan generally intervene when the Japanese yen goes to some levels where it becomes harming the economy, especially right now, the balance of trade, where it was negative, the last data. So this may need from the Bank of Japan to make something. So a possible intervention is here. So we should be careful. We know that in average, any intervention from the Bank of Japan will have a huge impact on dollar Japan. So a possible daily, for example, for the last time the Bank of Japan, they had an intervention in the last year in October, November, it was daily, I remember, around 500 pips. So we should be careful about a possible intervention. For the data that's coming from Japan, we will have like the other economies, the PMI levels that will have an idea, CPI also, the inflation data that we'll have an idea about where it's going, especially with the Bank of Japan wanting to continue some, it had like double objective. First of all, wages going high and inflation continuing to around 3%, 4% to those levels, like at least 3% for attending the objectives that they want. So this is concerning the Bank of Japan and the impact that we may see on the dollar Japan. Other pairs that we may take a look on, we have right now, especially the Australian dollar. The Australian dollar, we touched new low lows 0.630. It's a new low low for the Australian dollar, especially also same thing for New Zealand dollar. The two economies are showing so much, showing an economy that starting slowing. Plus, those pairs are risk sensitive, and last week, we had this news coming from China about one of the biggest real estate companies in China bankruptcy, filing their bankruptcy. So this having an impact on Chinese economy, on the Asian economy in general, and this may lead to contagion in the future possible. Especially right now, the housing market in China is in real problem. This problem is not right now starting. It started from at least the last 2 years, and it's continuing to be worse than Chinese responsibles are trying to face and to find solutions for. The Bank of China, they try to lower interest rates on different, especially on the 5 years, on 2 years, on the 1 year. All they may take it back by 10 points, 20 points, 30 points, basis points to help the economy. But the investors, they are waiting for more stimulus from China. China as an economy, we know the impact of it on the entire world. So we see developments concerning the economy in China and how much it could be impactful for the Asian economies, plus the other economies like in Europe and the US. So until now, that's what we have for this week. Be careful about the data that's coming concerning the economies and gauging the economy. That will be the most important thing that we should see this week. Also, we should keep an eye on the yields and the bonds. Like I said, right now things seems that the economy investors, they are watching carefully. They are pricing possible continuation of holding interest rate for longer time, for a longer term. Also, another thing is the impact of the actual developments in the economy and the markets on the stocks, and we were able to see how many indices around the world, they saw sell-off. We say this on the US, we saw this on the Asians, we saw this on the European. So we should be careful about the actual situation on the stocks. It could maybe be a possible correction. After it, we may continue, but we should be careful about the risk tolerance and the risk off that it seems aggravating around the markets, and even the fear that is going high, VIX going high, so, and even volatility. So we should be careful and have a nice trading week.